And a very good morning to you. Welcome to the TriggerCharts pre-market rundown for October 2nd, 2020. And man, do we have a lot to talk about. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts. Hopefully everybody's doing well today. We have a barrage of news that is hitting that is, well, concerning. Aside from the fact that we've had some interesting economic numbers coming out and a pretty volatile market, now we have that President Trump and the First Lady have tested positive for coronavirus, and the entire team and administration is under watch, as well as Nancy Pelosi and anybody that's come in contact with him. Joe Biden will be taking a test coming up today as well. So there's a lot of confusion, concern, and worries right now. We're going to get into that, talk about some of the implications for the markets, talk about how to trade it and what to do, primarily using the indicators provided by TriggerCharts. You can find all the information on that and what we talk about, of course, on TriggerCharts.com. The replay of this video and this discussion this morning will be on there as well. And, of course, over on the TradeStation trading app platform, where we are still the #1 overall indicator, particularly when it comes to the kind of work that we do, as well as the #1 highest rated overall. So a couple of things, ground rules for this morning, talk about what we're going to do. Well, you can actually put your stocks that you want us to review, or your symbols like commodities or futures or currencies, into probably right on the bottom there. There is a little pop-up. I'll type in the word here so you can see it into the chat, and we'll take a look at that as well. Before we go any further, I want to mention this is for educational purposes only. It is not a recommendation to buy or sell any security, and it is not looked at as anything more than something to help you along understanding some of the parameters of how we look at trading from a market profile, from an auction market theory, from a volume and price-based structure. Because we believe that it's really important to understand that markets trade in various ways. And one of the ways that we can really understand where the footprints in the sand are from where traders, and particularly big traders, the institutions, the hedge funds, are trading, is by combining the idea of volume and combining the idea of price together. Individually, we can see them, usually volume along a horizontal basis along the bottom of a chart. That doesn't tell us much. We can see price, and we can see where that's going. And of course, we know that only price really matters when it comes to the valuation of our investments. But when we put those two things together and look at tick by tick at where things are trading, where we are seeing that there is this opportunity based on where traders are placing their bets, based on the volume that they are trading, it gives us a much better idea, a clearer picture of what's happening with markets or a particular stock. All right. So with that in mind, I'm going to start this off and kick this off this morning. I think this is a good day to do this. We do this every once in a while with a quick poll, and it's live right now. You can do that. We'll get to the answers in a second. The question is, buy, sell, or hold? Are you buying, selling, holding, totally shell-shocked, still maybe from what happened back in March and what's going on recently, or trading this? And we'll get to those answers in a second. Right now, the Dow Jones futures are trading down about 480, probably about 495 on fair value. The SPOOs, or the S&P 500 futures, are trading down 59, about 1.8%. NASDAQ trading down about 2.5% right now. Gold is holding relatively steady. We've seen it come bouncing back and forth on some of this. You would have thought that maybe there would be an opportunity to see that gold will move higher today, but it's not. One of the reasons is that the safety trade moving back to the dollar is really in play. I want to direct your attention for a moment over to the right-hand side of the screen, and we'll take a look at that. And I want to show you where we are. We saw that big move up, that nice move that we saw off of that low. Let me get my annotation tools out here. There we go. So right here we saw those, that really nice bounce off the bottom. That was in July. And then we saw that right there, that yellow bar on a daily basis of the SPY called for a alert on the long side, a long bias, and we'll go through some of that in a moment, but basically color-coded, right? Yellow is a long alert or a short alert. The confirmation is the next bar. Green means, well, it's a long bias. And we saw that nice move up from about 310 all the way up to about 334. Then we saw some choppy action that moved in and out, and then we saw that break again And that yellow bar up here, which was again that long alert, move us up very nicely from about, where were we here? About 340, moved out right about 350. A quick dipsy doodle on the top there, that blow off top, and then a short call at about 350, 347, we'll call it, and then collecting some of that down at about 337. Now we see some wonky moves. Now, more importantly, what I want to show you here is something that I want you to really focus in on. What I want you to focus in on is that we've had these pretty wide levels of the altimeter. This is the ranges that we look at where this would possibly trade in a consolidation pattern. And then once you break out is really where you get that opportunity really for a vertical move through time that's very fast, upwards or down. Now, we start to see some tightening, right? If you look at this, this is from about 300, so about a 15 point range on the altimeter. Then we saw a little bit of a consolidation. Again, we saw maybe about 12. Then we started to see this one right here consolidate, getting wider again. Now look at this one where we are here, 343 to 320. Once again, a very wide level, meaning volatility will be there. There are no levels that you could really say are going to hold well. Currently trading at about 330. So we're right now trading right in the middle. There is nothing that I can see right now that is going to be really holding the level, especially on a Friday into a weekend with all this conversation going on about what's next. Is there a change in the profile for who's going to be our next president with only about 35 days left of this whole thing? So let's go through that right now and let's talk about that. And I'm calling this Houston, we have a problem. And we do, because President Trump, like I said, tested positive coronavirus. So did the First Lady. One of his aides also tested positive. And the question is going to be over the next several days, who else in the administration could test positive as they've been traveling together in pretty close proximity, questionable wearing of masks, and the idea that we have the West Wing, and when they get together, it seems it's not a lot of protocol for mask wearing as well. So now we have the potential for the election odds to change materially. If you look at any of the betting sites and you look at and if you follow any of them, you'll see that Biden has a significant lead right now, especially after the debate, which is a debacle, and of course after the news today in particular. There's a significant, I think, plus 61 benefit to the side of Biden. So that's an issue that we really need to contend with, because Biden has told us he's going to raise taxes, and he's not as friendly to the markets as Trump. And in addition to that, we want to look at, well, how much more regulation is going to be put back on and undone that was undone from the Obama legacy. I would think that a lot of things that were there, particularly things like green deals and areas of the markets that were dismantled by the Trump administration due to the excessive regulations that they were trying to get rid of, now all of a sudden turn around to the other side. So we have to look at where is that going to benefit us from a trading standpoint and an opportunity standpoint. Now, right now, today, we have a lot of weird news out there, right? Things that are shaking markets. We'll talk about the employment report that came out earlier today in a moment. But right now is not the time to really say, oh, that's a good thing or that's a bad thing, because really we have to wait for this to settle out and kind of, get through the next level. But if we do see that Biden is in the lead and the presumptive winner potentially of the election, then we have to start to think about what is the agenda that they're going to push and where may that benefit certain areas of stocks. Question about what's going to happen with the debates are coming up, right? They have this question of, we have this debate. There's some changes in the rules from the debate commission that is being proposed. Biden said, yeah, hey, we'll go along with that. President Trump said, no way, I won. I did great. Why would I want to change anything? Now there's a big question about whether there will be debates. Is it going to be virtual? I don't know. The next debate is scheduled within the parameters of the 14-day quarantine period for President Trump. And the question is going to be, how much of the hydrochloroquine or the drugs, remdesivir, or whatever, very hard names, these drugs to pronounce. I don't know. By the way, who makes up the drug names out there? Who is it that comes up with these names? That is so, why can't they just call it like, Alpha 1 or something, or, COVID dose 4, something that's a little bit easier to understand and to say, but they come up with these crazy names and makes it more difficult. Maybe it's on purpose, obviously. So what does this mean for markets? Well, we got to start looking at, green, solar, EV, back to that, if in fact the Biden platform is going to be in the lead, and we should start looking at those a little more seriously. They've already come up tremendously over the last few months, and solar has been a real winner. We talked about a couple of those names in the past. You can look at those from the ETFs. You can look at those from the stocks themselves. So there is some opportunity when we look at the green. Look at, what else is the ancillary issues? What about charging stations? We look at a company called Blink, for example, which are putting charging stations all around the country, because if we have a lot more EVs, and Gavin Newsom in California said by, I don't think 2030 or so, or 2035, every car on the road has to be electric, non-polluting. And therefore, there's going to be a need for charging stations because people are going to drive around and need to charge their cars. Whether or not this happens is a totally different story. Now, with the coronavirus situation with President Trump, it also changes things a little bit. We have the areas of the post-pandemic plays, right? The casinos, the airlines, the leisure, the travel, the cruise lines, going to be under pressure if there's a realization that there may be the continuation of a second wave, like we're starting to see in areas of Europe and certain areas of other areas in Latin America that are continuing. But now that we've seen a spike in the Midwest in certain areas in the U.S. and the realization that no one's safe. I mean, I think that's what this is saying, right? If President Trump, while he doesn't do a lot of mask wearing in public and all, but if he, the President of the United States, who is under constant care and really protection, generally speaking, can contract this disease, and whether or not he has a quick recovery, which we hope, of course, or whether or not it leads to something more serious like what happened with Boris Johnson in the UK, is really not the point here. But the point is the susceptibility of people to this virus so far away from when this started, and we'll use February, start of the year. Let's call it the start of the year. January this year is when it started percolating up, and it was supposed to be over and done with when the warm weather happened. That's gone. We're starting to move into the fall and winter season now, and what's going to happen in that situation. And that's what's going to be in the minds of investors and traders. Let's get for a second to our poll. We have about, most people, looks like most people did in fact vote. If you haven't voted for the poll, real quick, last second, because we're going to end it. And I'll tell you where we are. All right, about 85% of the people voted. All right, so here's the answers to the poll. Okay, you ready? Are you buying, selling, or are you holding, totally shell-shocked trading? The good news is 0% are totally shell-shocked. Remember, back a few months ago when we started doing these and this poll, a lot of people were shell-shocked and didn't know what to do. So hopefully this is helping you. Hopefully you're understanding a bit more about this. Number one answer right now is trading. Good for you. That's exactly what we're talking about. The opportunities that arise from these kind of circumstances are pretty good. And when we look at where we are from a volatility standpoint, trading obviously can be an addition to your core holdings, but trading is an interesting way to play, especially if you are utilizing some really good indicators and indications. What else do we have? Buying is 31%, selling is 13%, holding 19%. So what I would ask you to do is, if you have core holdings that you believe in and you think that are good from a fundamental standpoint, and if the charts look good and are in your favor, moving in the right direction, look to trade around the peripheral. There's some opportunities. And when I say trading, that doesn't mean day trading necessarily. That means things like swing trading. Swing trading could be weeks. It could be a month. It's till that doesn't play in the right direction of where you're going. So for example, you take a position, it launches off of a significant support point, for example, goes into the green, and we show you on the right-hand side right here, and then it stays with that. Trade that as long as it's in your direction. I always say this. I want you to believe what I'm about to tell you and make it part of your way of thinking. You can love a stock as long as it loves you. Very simple. Love a stock as long as it loves you, because they don't have any feelings or emotions. It's all about the price, directionality of where we are. All right. One of the other things I want to mention is stimulus plans. No agreement is going to happen. I think something will get done, whether it's $1 trillion, only $1 trillion, or whether it's 1.5 or 1.7, something's going to get done. Now, with the latest things that are going on, is it going to happen before the election? I don't know. That is a real big question. I think it will happen probably by the end of the year, once we get through probably the Supreme Court issue and nomination process and confirmation hearings in the Senate. And then on top of that, we look at, what's happening next. There is a need for stimulus. People are still hurting. Businesses are still shutting down. The wave of bankruptcies is rising dramatically. And now that we have the continuation of this horrible virus, which hasn't let up, this is only one piece of news. Just happens to be somebody who's famous and that we all know that got it. But it's been going on like this for a while, kind of the wave up and down. On economic news, initial claims still over 800,000. Housing market has been strong, and it looks like it's probably going to continue that way for a while. Manufacturing report was pretty strong. However, the forward-looking numbers in terms of new orders and a few things slowed down, and that's a little bit of a concern. Consumer confidence has remained pretty well elevated, which is pretty interesting considering the fact that we don't have a considerable amount of stimulus in terms of the unemployment compensation that went from 600 to 300. So spending kind of going to moderate a little bit. The employment report we saw today, mixed to negative, 661,000 new jobs or jobs added back to the payrolls. That was below estimates, about 850. Most people were in the million. But we did see an unemployment rate drop to 7.9%, which is pretty amazing. Good and bad news there. Earnings season's ahead, something that was going to create some volatility in the markets. Earnings season starts pretty much on the week of the 12th of October with the banks reporting, and with this yield curve as it is, there's probably not going to be a lot of really great news. I will tell you that there is a significant amount of negativity surrounding the banks right now. There could be some opportunities, as there is almost every time we see the banks report. They see a nice uptick because estimates are so low and confidence is so low, and outlook of what they're going to do is really diminished. So what we oftentimes see is them beat pretty handily, and then a couple of days later start rolling back over, as we've seen that the banks are doing terrible. Morgan Stanley, Goldman Sachs, okay. Wells Fargo, Bank of America, any of the consumer-oriented banks doing terribly. Let's see what else we had here. Economics next week, we have the ISM Services, FOMC decision, the minutes, not the decision, the minutes, initial claims, and wholesale inventories. Today, we're going to be looking at stocks like Twilio, SPI, which I want to show you because that's a stock that we talked about. It's something I talked about not running after unless you're doing some very quick intraday trading. But I want to show you that on a longer-term chart on what happens to some of these. Nikola, Roku, Wayfair, and gold and silver. So let's take a look at that. Let's see what the KRI is, by the way. The KRI right now was in a little bit of an overbought situation, a little bit hot, not terrible, kind of ramping back up here. But we did see that move off of the top there, which was something we identified a couple of weeks back that said, hey, markets are a little bit hot here and they're probably going to come down. And they came down perfectly. That pattern seems to be playing out when you seem to get all these clusters of red dots and then the return down, or the green dots and the move back up. So watch for those on the KRI indicator. KRI indicator, I always tell you this, is a very simple, elegant way of looking at markets. It only tracks one symbol because that symbol is just one input into what's going on behind the scenes in the KRI indicator. I'll tell you, you need to get a couple of different data feeds that you'll have to have. Check it out over on either on TriggerCharts or on the TradeStation trading app platform. In the instruction manual, right on the page that shows you the description, it will give you all the information that you need to know about this. So let's take a look back at where we are here. First one I want to talk about is Twilio, and we'll get to yours also. I have about 3 or 4 different stock. Twilio. So Twilio is interesting. We saw that the aileron, this is the aileron indicator on the bottom here. And when I look at this, this is not part of the Commander series. It's an add-on. So when I look at this area right here on the bottom, It is a momentum indicator that includes several different indications, momentum and trending indicators, oscillators, and we then score each one of them and come up with a composite of where they are. So you're not looking at just let's say a MACD or an RSI. We include a lot of very elegant ones in here as well, and then look at where they all land, score them, and come up with a composite number. So right now we saw that this came off the bottom after Twilio was getting downbeat. We saw that there was a nice move on a daily basis, about the 235 level, currently trading at about 278. So you would have looked at this and said, hey, you know what? We held support really well. And where do I look at that support level? I mean, I look right here and look at how it couldn't really get below that for some time, right? And then it bounced off of that, kind of gonna clip down a little bit right in this range here. Now we're seeing that they came out with a report today that said, hey, we're going to do a lot better in the future. Interesting tech company overall. Let's take a look at, oh, I told you I was going to mention SPI. Yeah. Look at that chart. I mean, you could have traded this. It would have been interesting to trade. Maybe let's kind of look at the time frame on a short time frame, like a 10-minute. You know, you could possibly look at this and say, oh, I want to short this at 860. Came down really nicely. You would have gotten out about 597. If we go back even further, well, we got to kind of bring on a lot more time in here. So let's edit this and bring that over here, and let's look at this 30 days back, okay? So 30 days back, we can see that giant spike. Now you would have been right on the button on this, right? Let's kind of move this over. Could have been right on the button on this to try to get in at 450 that eventually went to 45, but the volatility would have probably shaken you out a few times. This is a stock down about 3% at about 549. Still, you know, where is it now? Right about here. Holding support, but this is you know, something that's very scary because this thing was halted. And when you start seeing a stock that you have halted multiple times during the day, you have to wonder really what's going on there. There was an announcement that they were going to start supplying some battery and some kind of technology for EVs, and the stock moved up in a stupid way. This was last week when we had the low float and the low volume stocks just going crazy. That's always a negative sign, in my opinion. We've been talking about Nikola. So Nikola, we had this range that we put on last week. We saw that stock was starting to come in. Look at this nice basing pattern here. Now, yes, there's a lot of controversy around Nikola. You know, the question whether or not GM is going to commit their $2 billion, whether or not there is some allegation about sexual abuse issues with the former CEO who recently stepped down from the company and is out of the deal, Trevor Milton. And then you look at what's going on with the stock now. We saw this really nice basing pattern on it. Starting to pull up. Yesterday was up about 20% off of the bottom with the fact of news that there was the continuation of talks with GM. They haven't shut it down yet. You know, if you get a decent report, if in fact this isn't a fraud, if in fact it does look like there is an opportunity, I would see that your next level is somewhere around the 32 level, which is 31.25 we drew in here. But that base that we drew in last week is holding really nicely, and that aileron is turned up. Not for the faint of heart, but an interesting play on that area. Roku hit a new high yesterday, just yesterday. New high. Look at that. Look at that. Roku's a volatile name. There was an upgrade yesterday of the stock. I don't like to trade Roku, and I'll tell you why. Look at this chart. Look at all the gray. When I look at a chart, and especially on a daily or maybe even, you know, whatever you want to look at from a shorter term time frame, when I look at it and I see a lot of gray, that tells me there's a lot of consolidation going on, a lot of choppiness happening. I'm probably going to get off-sided a couple of times. When I enter this, I'll be in and out of this thing like you saw over on the right-hand side here. So when you look at this and we see, you know, it went short and then you got off-sided. You know, you went short, you didn't get anything, it went off-sided. It went long, off-sided. Went long again here, off-sided. Now this is a nice break above prior resistance, obviously. Down only 2.5% today. But this is just not a chart that I like to trade, a stock that I like to trade, due to the fact that I see all this gray. That's just not a good way, I think, to play a stock because of the fact that there is all this consolidation and it can move in any direction. So I'm not a big fan of that. Just a quick lesson I want to share with you on that. A couple more here. What do we got? W. This is that range we showed you the other day, and currently traded right up into that range that we showed you yesterday. This is a short that I said would possibly play in and out of the consolidation. Right now trading at about 308, so that's right down about here. Could come down very easily to 295 again. Held 295 pretty well. We're looking for this thing to roll over. Did an overbought situation yesterday on the aileron. This is kind of an interesting situation where you want to look at this. If it breaks, it'll break down pretty well. The reason why it went up yesterday was on the sympathy from the Bed Bath & Beyond numbers that came out. Bed Bath & Beyond, if you didn't see that yesterday, it was up like 30% yesterday. There you go. Came back, it went up to as high as about 2025. Kind of a long-term interesting situation. This is a company that was supposedly going out of business, right? It was down to $4. Now it's trading at about $18 right now. Gold, again, the question of what's happening with gold. Listen, gold has been, you know, let's just kind of do a very simple drawing here. Okay, look at this. You know, gold had this really nice move to the upside. Again, with the markets, it probably had a touch of a blow-off top, and now we're in this consolidation pattern, right? Very easy to draw that on a chart, just to look at that. That's what it looks like. Where are we? Well, we broke down below this level here of about 170, well, we'll call it 180. We did see support right here at this 174 line. The problem that I have with this is that when we look at this, there really looks like the next support line is somewhere over in this direction, right at about 170. So it's trading at about 178 right now. Gold has a lot of work to do to prove that it can go to the next level on the upside. But I think that when we look at this, it's not very clear right now. And even if we do get above and get a long bias buy signal, and right now, if you look at on the top part of the Commander series, we're seeing that on a daily, which is right here, and a weekly. Weekly's been long. We could change that to weekly, see that it looks pretty well on a weekly, tapping support. But again, back to about that 174 level, that is the support. I would wait for it to come in and then look at this. But as a protective measure, could be interesting. Silver, this is on a weekly basis too that we're looking at right now. Silver's got nothing going on. On a 240, I believe it's 240. If you look at that on the top, it's 240. So we look at this, it's a long profit. We go back to the daily, it's going to be in a consolidation, which it is, back and forth. Again, really needs to hold on to this 21 and a half level before it has just nothing below. You see the aileron is showing it's in a downtrend or it's in a momentum trend on the downside. A couple of stocks that we have to look at. AMT. We're calling a short here on AMT, seeing that there is a little bit of just a little bit of a diversion that's happening in the aileron, an uptick right now, flat on the day. We look back a little farther. This is daily, right? Yep, daily. You do have support right there, right at the 242. I just simply draw a line. You could take your line tool, just kind of look for where those levels are. You can see that it's kind of traded through there, traded right on there. You know, where is there a stronger support level? I would say down at about 224, definitely. Resistance, there's no question. There is just a hunk of resistance at 248. You know, for me to get back into this, you see this really nice consolidation. Let's again draw something on here if you can, and look at this very quickly. And we'll look at this, you know, this consolidation right through here. I would love to see it over 258 to start really getting involved in this. All right, what else do we got here? We got Win. So Win is trading down about 2.5% today. Not too bad, about 70. Where is that? Right on its support level right there. So again, just drawing a line here. If you look at that, kind of right about here. 70.01, where's it trading now? 70.52. That's where the support is. Starts to break down underneath that. You got some problems going, not too much because you got some support at 67 or so as Las Vegas opens up once again. Starting to see the aileron turn here. Let's take a look at this on a weekly basis. I'm kind of looking at, I want to see what we have here. Yep. On a weekly basis, it's interesting. We're seeing that support probably right down to, I would say, about the 67 line. 66.5. That's a good support on a weekly basis. I do like it at that level. I want to thank you for joining me. It ends our time together today. Make sure to go over to TriggerCharts.com. Check out all that's available for you over there, as well as the Trading App Store. Last thing I'll note real quickly, 4 hours. there's a 4-hour course that will give you 3 parts if you are a subscriber. So anybody that subscribes to the Commander Series, send us an email at support@triggercharts.com and we'll make sure to get it all out to you. Thanks so much for joining me, and I'll see you again next week.